All right. Good afternoon, everyone, and welcome to our webinar today. I'm Bobby Argitis, Senior Investment Specialist, and with me today I've got Gary Christie, Senior Technical Analyst and Head of North American Research at Trading Central. And today's webinar topic is Charting Success, How Professionals Use Technical Analysis. Earlier before I was chatting with Gary, and I was saying, my title might say the word specialist, but really he's the expert in this subject matter. So you're very you're going to enjoy today's webinar. Obviously, maybe just start off. The information provided in today's webinar is strictly for information purposes. That does not constitute a recommendation on our part. So obviously, as self-directed investors, you're ultimately responsible for making your own investment decisions. So just please keep that in mind. We've had previous technical analysis webinars, and clients are always asking us, well, they'd like to go deeper into detail, a little more information. So this is how we're going to go ahead with today. And I just want to give everyone maybe like a quick heads up. So obviously, Gary will be talking about the Technical Insight tool, which is a tool that he actually uses on his on a daily basis. So we actually on our YouTube channel, and for those of you who aren't familiar, just go on YouTube and type in NBDB or write National Bank Direct Brokerage. What's important is to look at the logo here, and once you're on our YouTube channel, just scroll down to the Enrich Your Experience as a Do-It-Yourself Investor, and you will find two videos on, one is Discover Technical Insight Part 1 and Part 2. Just to give you an idea, the Part 1 is basically the filtering tool within Technical Insight, and the Part 2 is essentially once you've chosen your security, how to analyze it, and there's an additional a tool called Phoebe, which Gary will talk about a little bit later today in here. So you can find the finer details you will have in these two videos. And lastly, there's always people who are asking, was there additional information available on technical analysis? So I would suggest once you're on the NBDB website, go to our Learning Center and just type in technical analysis. So we have several articles out there. So again, buy and sell signals, chart patterns, the RSI, support and resistance. So again, there's specific articles. So again, if you're looking for something additional, then I would suggest going that way also. And that's about it on my end. I really want to give Gary as much time as possible to talk with everyone and present this website. Obviously, if you have any questions, write them in the chat. We'll maybe pepper some questions during the webinar, and then maybe save some for the Q&A. But if anything comes to mind, add it to the chat function. And Gary, that's enough of me talking. They really want to see you, so I'll stop sharing my screen, and you can go ahead and share on your end. Go ahead.
Awesome. Thank you, Bobby. I'll just share my screen right now. As I load that up, please feel free to put it in the chat. Make sure Bobby can see it's working all fine. Everything else is all good. I just see my own screen today, so he'll ask me questions at the end if there's anything coming up, and we'll leave some time for that at the end. But thank you, Bobby, for having me. It's always a pleasure. I love being able to talk to your clients and talk about my passion, which is technical analysis. That's what I've been doing for almost 15 years now, maybe even longer than that. But I'm a technical analyst by trade, by profession. I branched into other things at Trading Central now, but it's still my baby, I feel like. So, and this tool you're going to see today, we'll show you how to get there. This is really, what I use on a daily basis, really to help find ideas, right? So I'm going to show you a little bit of how I use it. Maybe you can consider me a professional user, where I'm looking for, as part of my day job, to find ideas every day. This is kind of my starting point, okay? So let's just jump right in, right? So I'm on the home page right now, and under markets, right, you'll see a Trading Central tab. So today, markets have been quite volatile, right? NVIDIA's been the talk of the town today. We'll see how that looks like in certain pattern recognition these days, but what a wild day. Right now, the home page is set up right to Technical Insight. Now, there's a lot of insights we provide at Trading Central. Those are for future webinars. You're going to see tabs like Fundamental Insight. This is where we use a quantamental approach to fundamental research. Strategy Builder to build a screen, technical and fundamental in there. Some featured ideas we'll touch base on today because they're technical and fundamental combined as well. But I always like to start my day off with, first off, it's with this morning brief, which everyone has access to, because you're going to have a little bit of most relevant news in here and some technical insight as well. And this is kind of how I start my day. So we spend a lot of time here, our research team around the globe, building this every morning before we start our trading day. In fact, most of this is done before I even wake up, thankfully, so I don't have to have any longer days than I already have on this desk. I'm in Ottawa, just for anyone who's curious, with a research desk on Preston Street in Ottawa right now with the team of analysts here. And we compose all this news and research and technical analysis opinion, all this newsletter every day for you, where we give you basically a quick summary of what to expect today. So just the whole point of this newsletter is to be aware before you place your trades, either buying or selling or managing your portfolio. What should you be aware of in the current market? And we already have the news while you sleep compiled in here, and the short-term trends of the futures markets. We always like to use the futures markets as a proxy for what can we expect today. Are they trending lower or higher? You see here we have S&P 500, the TSX futures, not widely traded, but at least they do have a trend. But what I like to get down to, as you can see here, there's gold and crude oil. This is all technical opinions, by the way, where pivots mean our stop loss, where we're bullish or bearish above or below this key level. And it's a level you should all be at least conscious about. And then we have targets as well, all based on technical resistance and support, which we'll get to in a minute. But if you fly through it, again, this is pretty critical, in my opinion. We can see what's happening in the morning, how the markets have reacted, how European indices have been trading, and then we get into some commodities with crude oil and gold being, of course, a hot topic these days. How is that being reflected? Of course, in Canada, heavily resource-based. So these commodities like crude and gold have a big impact on the trends of the day, right? And then we have a US snapshot. Of course, we had earnings out last night of NVIDIA, which is kind of disrupting the market today, and Salesforce as well, and so on and so on. We like to write news that's relevant, that's actually market moving, not just because it's news, right? So we don't want to waste people's time. We hate doing that at Trading Central. If you're going to read something, it has to be actionable and potentially market moving, which is our passion in regards to writing news. Then, of course, we're going to have earnings expected and the economic calendar for the day. This is critical to set up your day. Maybe some economic event will be critical. It could affect the sector you're invested in or the stocks you're invested in and whatnot. So obviously having a quick overview of what to expect in terms of economic reports. We had jobless claims today. That was a big one in the US, which was better than expected. That came out eventually. And then we have the Canadian snapshot, right? So all the popular news releases that you can expect, we're coming into earnings again this time of year. So you'll have it all right in here as to what to expect, right? So pretty critical stuff. Engaging. I like it's actually fun to read. Maybe I'm slightly biased, but because a lot of us spend a lot of time writing it, but it's functional. It's for a reason. But I'll jump right down. You can have some time playing with that. Submit your email to get in your inbox every day, of course, or jump right online and log into the site today to get it. This is what the charts look like. This is the 30-minute bars, and this is unique because we're talking about technical analysis. There are different types of technical analysis. And I want to start with this because there is the predictive type of technical analysis, and then there's the reactive type of technical analysis. And what you're seeing in these charts today is to set you up for the tone of the day in terms of the trend. And this is more of what we call the reactive. So we're using moving averages. The red line's the 20 period, the blue's the 50 period. These are we're trying to detect the overall trend. We're not trying to predict price behavior per se because we're not using patterns in here. We'll get to that in a minute. But we're trying to decipher where's the major trading levels happening. The blue line's that pivot point we talked about, 69.35. So we're bullish this morning above 69.35. This could have changed as I'm talking, right? So this is a snapshot in time using CET time this morning before the market opened, and you can see the overall trend, right? So again, sets you up for the day. There's the TSX, been also very bullish, right? If we cross below these lines, then we change our view right away to bearish, as a bearish overall opinion. We never debate about it. It's systematic. right? So that's the beauty of technical analysis. You can develop a systematic strategy that's black or white. It's either bullish or bearish, and then you accommodate based on the scenario. And it leaves no room for subjectivity or opinions. You may have a different opinion of the TSX market right now. Maybe you're bearish, but we're looking at mathematical models to say, look, it is actually still trending upward until we invalidate these levels. That's an important distinction. So then moving down, what we're going to see today is really these types of patterns. These are automated classic patterns. We try to give you the best of the best every morning when you come in here. So we see some interesting ones today, like Newmont Corp, which is, I see a nice symmetrical triangle. It usually appears after a sustained uptrend. It's a consolidation phase. This is actually one of the most popular patterns taking place in the market right now, specifically in the basic materials sector, the gold sector, gold stocks. A lot of stocks are forming this very similar pattern taking place. Again, this is not a technical, it's not a, say, an advisory opinion here. This is based on textbook theory, right? So what happens when the formation forms this way and it breaks out, either the upside or the downside? We know from history, and we have over a quarter century of data at Trading Central of detecting these types of patterns. So we know usually how they resolve, but it's not an exact science, right? So it's just help you with your trading plans. But we'll provide the best of the best this morning, almost like featured ideas, which we'll show in a minute. We have a technical score, which is important to understand first before we jump in. I'm just gonna zoom in here so we can kind of see it a little bit better. Short term, medium term, and long term. Generally, I like to look at this in the morning, and if it's all green, that's something I want to add to my watch list, right? So I want to be, in the right direction on all time frames to have the best chance of success. But you won't always have that, and sometimes it's rare. Okay. And right next to it, we're going to combine a little bit of fundamentals with technicals. We have a quant rating, which is extremely strong for this stock. So generally, I don't see much instruments above 60, right? So when you get to the 70 range, what this means is that under 5 factor scores, we use growth, quality, momentum, value, and there's another one in there. We'll get to in a second. But when they all show a strong rating above 50, it's highly unusual, and it just means you have fundamentals on your side. So that's a quick indicator to read that. And then, again, so you have the best of the best here in terms of setups this morning, and oscillators as well, commodity channel index. We'll get into some of those, and there's education built into this tool in a minute. But again, just wanted to share with you kind of how we start our day, because we write it every day. So you're getting the zone, you're getting the brain of a team of 10 global analysts just setting you up for the day. So it's quite unique. So I'll just get back to the top here and get to the real fun. Let's jump right into technical insight. And if there's any questions too, Bobby, you can stop me anytime. I can also see the feed, so I'll try to address those as I get a blip in my ear, so at least I'm aware something's coming in. And I encourage you all, please ask questions. I may miss something today, which is normal. There's lots to talk about. So again, getting to the tool, go to markets, right? When you log in, and Trading Central, you'll have all our insights here. At Trading Central, we call ourselves like a house of insights. That's all we're trying to achieve here today, is to give you insights to make your own decision, right? Not giving advice here. It's just more giving you the insights from the data that we collect all around the world for all these instruments. But once you land into the technical insight, which is what we're looking at today, let me just explain quickly what we're looking at. So at the top menu, we'll get to these tabs in a second, but there is a fantastic technical screen where I spend probably most of my time. And then we also have watch lists that you can build yourself. If you have a list of symbols, you can create many, many watch lists of different sectors or different themes. That's available to you. And then we have this alert center where we can automate some of this technical analysis, which is, again, really where I spend most of my time, automating my workflow, because we do this all day. I just can't spend hours every day going through this research, and no one has to anymore. We can automate that research. If you want to jump right into the fun, you can put in a symbol, right, and get right to a technical opinion under the symbol search. And there's also education we'll get to in a second, where you can learn all the patterns that we detect in technical insight. We detect over 60 of them right now, technical events. Those combined with classic patterns, oscillators, short-term patterns, candlesticks. A lot of these are available to you, and we have a full education system in there built in. If you want to learn more, we partnered with an expert in technical analysis when we designed this tool over 20 years ago now. His name is Martin Pring. He's kind of the godfather of technical analysis. He's written a lot of books. One of the books that got me into this industry was called Technical Analysis Explained by Martin Pring. It's widely available on any bookstore, but called Technical Analysis Explained. He partnered with us to help create the logic behind what you're going to see today. And really a nice, easy read. It's a big book, but an easy read if you want to learn more about concepts. I'm a technical analyst by trade, but I know a lot of traders will focus on what interests them themselves. Certain patterns we'll get to, maybe certain oscillators. You can't, it's not no point in knowing the entire book, right? It's more of, well, what makes you curious and what makes you have fun when you're trading, which is why we're all really here, right? We want to have fun investing and doing research, and this is one of those tools that does that on a daily basis, right? We want to have some fun. So there's more education there we'll get to. There's a help center with FAQs. I won't do all that today. I want to get to some of the fun. So again, what do these ribbons mean, right? So this is the home page. At the top, we have the most recently viewed, right? So this is going to remember what you were looking at personally. This is I'm on a demo account right now, so not my personal searches, although very similar to what I would be looking at, right? S&P 500 there, NVIDIA, top moves. So again, it's going to remember what symbols you put in here to do a search. If you just for a quick reference, if you come back tomorrow or Monday, you say, okay, what stock was I looking at? You can go back and find that ribbon here, right? The next one is the most viewed bullish by all participants looking at this tool right now inside National Bank, right? So you can see what your peers are looking at, right? And which ones are the bullish ones, separated up from the bearish ones. So these are, again, almost like a quick watch list or heat map of what symbols are popular today, what people are clicking on that are bullish in nature. Very similar to the most popular. This is by symbol, not so much by technical pattern. It's just what symbols are people looking at. I always like to look at this as a sentiment indicator of like what kind of sectors are people interested in. I can see right off, Telescorp was popular. I think they just went ex-dividend recently. Maybe that's why they had a bit of a slump recently, but it pays a dividend. So maybe people are looking into that. Who knows, right? But these are the most popular symbols at this moment in time, which you can cycle through and see there. And then trending now, these are usually ones that have the biggest price percentage move. You see the price percentage of the last 5 days, they're going to be kind of big upward or downward in terms of trend. So we will see some penny stocks in here. And we can cycle through and see, some bigger moves like Ridgeline Minerals, 7% move is pretty substantial. And then, of course, we're not biased. We'll show the downside ones as well. We understand some people maybe like to have a bearish opinion. Maybe they trade options and want a bearish scenario, or they are long these positions like an Enbridge or something like that and want to protect themselves and say, okay, there's some warning signs here. Should I take profit, right? Should I think about reallocating my capital somewhere else if there's a lot of red on the future of technical patterns for this instrument? So you can view all of them too by clicking the button. Again, this is just a quick overview to get you some ideas, right? But most of the time, which I think people say that, or at least I do, because this presentation is more about how do professional technical analysis use this tool on a daily basis. It's usually in the screener, right? Because I have different requirements from specific clients, looking for specific time frame of analysis, particular patterns. This is where you can really customize that. And again, if you have an account, please, I encourage you all to follow along with me when you're on the website, and we can replicate the exact same thing here. This is all live right now. So let's just jump in to the screener. And there's a lot here right now, automatic, right? So we have a default setting, right? So stocks and ETFs. You can look at index, and I'll briefly touch base on this because I get this question once in a while of, Gary, why should I care about what the index is doing if I can't physically trade it? Well, it's just like that morning market brief. We should all be very aware of what trends are developing in the index that our stocks are housed in, right? So here's a nice little quick overview where I can get a pulse of what's happening around the world in terms of the indice. If it's bullish or bearish, does it meet the same requirements as my stock? What I mean by that, it's more of, I like to call it a top-down approach to technical analysis. If the overall, say, TSX 60 index is bullish, then I have more confidence looking for bullish scenarios for Canadian stocks, obviously. I don't really want to go against that trend, that whole trend, right? If it's bearish, then I should be very cautious trying to pick bottoms, which is extremely difficult to do, right? So we want to kind of have all our odds in our favor. I like to call it a high probability setup, when all time frames are aligned with your opinion and the overall broad index is also reflecting the same bullish or bearish bias as your opinion on the stock. So right here, I'm just going to quickly look at classic patterns. These are the most popular patterns, by the way, just because they have this geometric shape on the chart. And they give us what's called a measured move. So it gives us a target price. Not all technical events do that. Indicators and oscillators don't do that because there's no measured move, and I'll show you what that looks like in a second. But I see a quick index here of a Dow Jones General Mining Total Stock Market Index, right? Pretty interesting to me. This is not something you can trade, but you may trade the stocks in that sector. I see a continuation wedge. That's the classic pattern taking place, and it's bullish. You'll always see them on the chart as this triangle in green or a triangle red in bearish. These represent classic patterns. Okay, if I remove that and clicked on indicator or oscillator, they're going to be circles and squares. So just understand that if you're looking for the classic patterns, it's going to be in this this triangle shape. I'll go back to classic patterns. It's super fast. As soon as you change your search criteria, it'll update. You can look at it from a chart view. That's what next to the subscribe button, you'll have this 6 chart window. We call this table view. This is where I like to sit most of the time, because now I can visually see what's happening, right? And I could also change the opportunity type here. If I'm bullish the market, so I want to look for bullish opportunities, please do so. Change right away to that, right? Go bullish. It's going to change right away to all the bullish ideas. Here's that general mining total stock market index. We got S&P 500 gold sector up. And as I said before, you're going to see a lot of similar patterns. These symmetrical triangles are normally pretty popular and appear more often in the top of a bull market, right? From a prior uptrend. You can see this uptrend right here. And that's interesting too, because we know gold stocks have been strong. The sectors also remains quite strong, despite that massive gold decline we had a couple of weeks ago. But here's a lot of patterns here. This is where I kind of do my search in the day, and maybe you want to add these to a watch list. But there's tons here for indices to get you the tone. But we'll get right into the fun stuff, which is really the stocks and ETFs. Now, remembers what I selected now? We have these patterns constantly being refreshed, right? But now I can fine tune it, right? So I'm looking at the exchange. I can go by specific exchange. I can go by the USA market if I like. I'll keep it to Canada right now, right across all the spectrum of exchanges. And you can also select curated lists. So this will be tailored based on how I select the exchange. So because I'm in Canada, it's going to filter to these pre-populated lists that are created by our analyst team. So we'll see some TSX 60 in here. It comes from the exchange. We'll see mid-cap, long-term uptrend, most valuable brands, so on and so on. So you can look for ideas here, right, based on what you're looking for, right? Volume, some pre-populated lists. I like to keep it open for this example today. You can also cycle by sector and industry. If you're looking for specific industries that are outperforming, we've seen that in the case of energy, gold miners, and basic materials have been strong. Some financials have been strong. You can dial right in to those sectors if you like. And then, of course, we have the bullish or bearish, right, ideas. So let's just stick to bullish for now. Let's go down the page and show you how we use these tools. Generally, of course, now we have ETFs in here as well. You can select. If you do that right away, you're going to have a quick change, and we'll find we cover. There's almost, I think, more ETFs now than stocks in the marketplace, right? So we were aware this is a big pool. We'll have leverage ones in here. We'll have all types, right? But for this example, I'll keep it to stocks right now. And how do I use optionable? For those that do trade options, of course, you want to look for stocks that have options listed. So we are aware which stocks have an option series. You don't have to be an expert in options to understand the value in this. I like to enable it because to me, it's a liquidity filter. So we know that if a stock's good enough to have listed options, it's probably going to have good enough volume most of the time to trade. And we like to trade liquid instruments that have a lot of volume. These are the rules that we hereby at Trading Central I'm sharing with you today. It's not the same for everybody. Everyone has their own way of trading, but we generally have a rule of the stock price shouldn't be below $10 a share just to have enough history in the price chart, and should have enough volume over the last 90 days and be optionable just to have the best chance of success and have a certain market cap. But That's the next step, is that you can select all or select a specific market cap. And we understand that some stocks, like some small caps, may be favorable depending on the current market regime we are in, right? And that, again, that's a more top-down approach, maybe for a separate webinar. We can talk about that. But again, to your own choice. I like to leave it to all, and I generally like to lead toward the larger cap stocks because of the safety and the price history that they offer. But there's no right or wrong here, okay? The next one we talked briefly on from that Market Brief newsletter is the quantamental rating. So you can't see the rating in this product. We have another product for that, and for another future webinar that's available to you inside this platform. All I like to do here is move this bar to the 50. And why do I do that? I want to make sure at least I have favorable fundamentals on my side. I know a lot of technical traders are purely technical, right? There is a reason for that, because we, as technical analysts, as pure technical analysts, we only care about price action, and we can forego all the news and fundamental research because we believe everything is reflected in the current price of the product right now, right? And there is truth to that as well, right? But this is a quant rating that takes those fundamental data points like cash flow, operating margin, PE history, the number of shares outstanding changing, so on and so on. And we can compile a score like we showed in that market brief, and 50 to 100 are the best of the best. So why not have it, on your side, right? To have the best of the best, just to have an extra check mark for safety while you're searching for equities. And it's purely quant driven, meaning it's done by a massive algorithm. It's not human opinionated at all, which is beautiful here. And that's really one of the benefits of technical analysis. It's purely based on price action, not opinions. So you can really come to a conclusion without having, someone change their mind tomorrow, right? It's purely price based. So there we are. We already have a pretty detailed screen going on right now, right? And keep in mind, you won't always have classic patterns available to you. Classic patterns are more rare in general nature, right? So when we see them, it's for a reason, and we have to detect them based on certain quality metrics. So we don't want to show just any pattern just because. It has to meet very specific criteria in our database. A lot of that's part of our secret sauce and our patent. We can't really share today, but it's all based on textbook theory, right? And we own the patent to that, which is what made Trading Central so successful in this industry, is that we really were the pioneers in automated technical analysis. Now we have classic patterns. Right away here, I have a lot of interesting ideas. A lot of them come into the, as I said before, into the mining material sector and gold. You'll see similar triangle patterns. A continuation wedge, it's very similar to a symmetrical triangle. Ascending continuation triangle, we see a lot of triangles here. Now, how successful are they is that's variable, right? So really, you need a little bit more than just the pattern to make a decision, but it's a good starting point, right? So I would take into account that quantamental rating. I would take into account maybe an oscillator like a relative strength or a MACD, which we'll get to in a second. But just one item won't tell the whole story, right? Just one pattern. I really encourage everyone to explore and find their own methodology and use their own indicators and stick to a plan. So here, again, this is enough for me. I can add one more filter for classic patterns, which is the possible price move here. And this is because this is only available if you select classic patterns, because classic patterns have what's called a measured price move. This is this light green area and dark green area you'll see in the chart, which we'll get to in a second. But they will have measured moves based on the width of the pattern and the length of the pattern. So I can say here, I want at least, it remembers what I did last time. I want at least a 15% price move. That's the kind of trade I want to make. I want that risk reward to have a potential opportunity to make 15% on my investment. And this is very restrictive, and this may get no results. But if I click that right now, right, and it will update real time, and you will see certain patterns get removed. But there is a lot of them, actually. Yep, that's a lot of them today. Again, it will only work if you have classic patterns. If you disable classic patterns, this will not give us any actual reading, because, again, these are mathematical oscillators on the chart. But as I was there, let's click on classic patterns. I want to show you something really important here, the subscribe button. If you like a strategy, we can call this a strategy or a screen, and you're sticking to this, you can have as many as you want here. If you click on subscribe, you can call it whatever you want. I'll say Gary's Classic Patterns. And as soon as you click OK, it's going to go to your alert center, which we'll get to in a minute. But now you can be emailed, and you will be emailed every day new arises in this list. And the whole point of this product is to automate the research so that you can go into your inbox every day, or you can log in right onto the site, and you can see the newest updated instruments. You'll be alerted to when there's new ones. And you can track this screens. You don't have to go in every day and rebuild this. And you can have many, many different ones. For the example here, I'll just quickly change one more. I'll remove classic patterns. And let's just go to candlestick and bar patterns. Now, what are candlestick and bar patterns? We use this because they're more short-term in nature. And again, it's like a chart. They have a shape to a price history. And it will change your price history, which you see right now we have bar charts. These are all bars on the history of the price chart. Candlesticks gives us a little bit more information. And again, I could give a whole webinar on candlestick price charting. The important thing to know is it's probably the oldest form of technical analysis that exists. Candlesticks. I'll click on it right now just to show you what it means. Right, so I have candlestick and bars here. If I remove bars, I won't do it today because it'll probably take me a bit of time. But this is what a candlestick chart looks like, and this is what a bar chart looks like. Right, I'll just zoom in a bit here. And these bars give us a lot of information. Right, so a hammer looks like a hammer, and there's really describes the tone of buyers and sellers for that particular time frame. Right, so these candlesticks actually were invented by the Japanese over 400 years ago, and they were used in the rice markets of Japan to help really determine demand, right? Supply and demand of rice, and they used futures markets back then. So pretty old, fun fact, pretty old use, which is still used today in modern technical analysis. Candlesticks were the first, and then we had the more westernized classic patterns. But this is really, there's a whole education you can pursue in the art of candlestick charting, which really is an art. And there's a great book out there called Japanese Candlestick Charting Techniques, written by a guy named Steve Neeson. Fantastic book, gives you all you need to know about classic patterns, but it's also embedded in this product here about classic candlestick patterns. All right, so I'm just going to zoom out here. I have short-term patterns enabled. I can also put that into an alert and subscribe. I won't do that today, but that's how you automate screens. And again, you could spend hours on this. I encourage you to play around, try different scenarios. Again, we also have oscillators if you want to follow moving average convergence divergence, a MACD, so on and so on. Those are pretty popular. The most popular ones, by the way, that we use at Trading Central are the relative strength index and the moving average convergence divergence. These are embedded in mostly all of our charts that we provide. You'll see those in the news brief, actually. We use those with the price history. And that's just for us, that's our own methodology. There's no right or wrong here, but they tend to work the best for our style of trading and investing. But we'll jump into some real ideas here, because now we have a screen, right? If I go right into my alert center, I can see all the patterns we've built in the past. I've given quite a few webinars on this here, and my colleague Nicholas in Paris. So we have a bunch set up here already, a few Garys in here, right? Here's Canadian breakouts. There's 2 events here. But you can activate and deactivate quickly by using these toggles here. Right? We have some in French, of course, as well, our French clients, when we give demos. We also have symbols. So you can put in a specific symbol and be alerted to a technical event if you're watching, say, Apple. Let's just do that right now. If I pull up Apple as an example, right? I can go ahead at the top, click the alert bell, and I can be alerted to classic patterns, candlestick patterns, oscillator, indicators, whatever you like. For stocks specifically, if you have a watch list, say you have a holdings and you want to monitor your holdings, I encourage you to go ahead and do that. And you can also create those alerts in the watch lists. Here's a bunch of watch lists right now, right? We have a bunch of them in here we've created. You can easily add a new watch list, call it whatever you want. I'll just keep it to test. And I can add in symbols like Apple, and you can keep going and so on, Microsoft. And as I do that, I'm going to get that similar summary score that you saw in the market brief when I first started this presentation. Right, so you have the whole overall radar. Again, I like to see the most green, the better. And I could go into a list if I want and search for popular fully green instruments like Equinix. Is kind of interesting. It's very bullish on all time frames. This is adhering to that top-down methodology of technical analysis, looking for all time frames to be favorable. right? I have a bunch. I have there's one here in energy, tech US. Metaverse was kind of an old terminology that was popular a couple of years ago, and it kind of fell off the face of the earth. But Equinix, if I like this instrument, I can quickly jump on it, again, just to show you how seamless this product is. And now we're in the main page. I want to spend about 5 minutes here so I can open up for some questions. But really, this is the main product right here. After you're doing your screen, this is where you get down to the fun analysis part. You can interact with the chart, right? And how I like to do it, right? I can add my indicators that I use on all my charts, like I talked about, right? So I can go ahead and add in, like a MACD in here, right? I can go ahead and add in relative strength, which is somewhere in here, RSI, right? And we detect patterns on all this. So whatever indicator that we add, it's there because we do automated detection on these types of events, types of classic patterns or oscillators. So you can customize the chart to what you like, and it will remember where you are. We're in that candlestick chart view, which is my favorite kind of view because it gives me a little bit more information. But you can also change it to a bar chart, and it can change it to even a line chart if you want. We'll still show you events. So you can hover over and you can see all of the events we detect on this product. All right. So I'll go back to candlesticks. That's where I like to sit. I can see some major crossovers here, like a moving average crossover, right? I can see an engulfing line. That's a candlestick pattern where the latest bar engulfs the prior candlestick, meaning there's a change in buyers and sellers, right? So buyers have picked up momentum. That's a nice big reversal that we saw here. That worked out quite nice. That's called an engulfing line. If you want to learn more, just click on read more. All the education is built in. We're very transparent of how these patterns work, right? It's not subjective in any way. We're using textbook theory, and you can keep on learning more. And as you click on that, you'll go right into our education center where you can look at anything I talked about today is going to be in here, right? So some of my favorite patterns, people always ask me, Gary, what's your favorite you look at? I'm a trend following trader. It's what I consider myself. It's my strategy. So I look for upside breakouts, right? I like to have stocks that are making new highs because usually when it's a new high, there's no more sellers available at the top. And again, I can talk about that for an hour. I won't bore you with all that today. But the quick research is from education to research, it's so seamless. So if I want to learn about what an upside breakout looks like and what it should look like and how to trade it, all that information is going to be here, right? And then as I've learned it, I want to find more events like this. I can quickly click on find events. And now I'm scanning the entire Canadian universe for only upside breakouts. Look how fast that is, right? So I've gone from education, I've learned the pattern. I want to find these patterns in the marketplace right now. I can click on the table view and look at all these breakouts happening. No surprise, here's a lot of gold stocks breaking out right now, quite interesting. I can click on it, learn a little bit more. There's the upside breakout. We draw it on the chart, and that's still playing out. So keep in mind, these patterns, the height of the pattern is the measured target move, and that's why we have this dark green area up here. So we know that from the signal, the triangle, right, we broke out, it's confirmed the pattern. Now we have this zone of where we'll be profitable, and then the target price, right, to where we think this will go based on this pattern, but it does not mean it ends there. Right. So once it hits there, generally we play with other tools. We maybe add a stop loss. We keep the position open. We like to let our profits rise and continue. Right. There's a couple patterns here. If you click on them, I love it when we have more than one in a pattern. We have a symmetrical triangle and a breakout. That's a high probable setup. We like to see these. So it's quite interesting. And again, this is on the time frame of 6 weeks to 9 months. You can cycle through to the long term. If there's any, they'll be here, of course, and the short term, right? Or cycle for all events. And you can scan for the ones that you like. But this is a pretty substantial breakout right now. One tool I have to use hand in hand down below would be the stop price. So how do we use this? Say I'm long right now, and this has been working out, right? This is trending higher. I can click on stop price. And now you have some ideas here of what to do. So we suggest a medium stop loss. That's that purple triangle right here. But maybe you're more aggressive. You want to protect it more. You can go to do a tight stop loss. And now it's really tight, just below that price action, the breakout. And again, you can be alerted to that, right? So I can click on the alert, and boom, I just added a stop alert in 2 seconds to my alert center, and you'll be emailed and alerted when it's been reached, right? Hopefully never, you never know. But you can also do probably how I use the tool is using the percentage stop. I have a personal rule that if a stock is down 10% from when I bought it, I am wrong, and I'm okay with that, and I move on. I'll get out of the stock and reallocate that capital to something else. So you can do that as well and be alerted for a 10% stop loss, and it will show you right here where it's at. And it's kind of coincidentally a perfect spot because it's below the breakout. This is what we like. The last thing I want to show you that's probably the most underused, which I think everyone should try out, is the trailing below stop loss. So you can have a trailing stop, meaning as the price goes higher, right, you want to be able to raise that stop to capture in all that gain, and you're playing with the bank's money, I like to call it, like at a casino. You're playing with the casino's money. Once you're up big, you're playing with free money. This is critical. What you can do here, I'm looking at this stock right now. I don't know much about it. Revival Gold, pretty interesting. This date, I can go ahead and say, let's just pretend I bought this stock on February 1st. And I want a stop loss to trail below by a certain 10%. Now I could see if I would have been stopped out or not, right? By using the stop loss. And it will draw a line and see right there, I would have been stopped out quite a bit right away. I can change that to a tight stop loss. And if I had that tight stop loss, you can see how that reacts with this purple line as I got in. Would have been stopped out, right? So again, I encourage you to play around with this loose, and it helps you build your strategy of, how tight of a stop loss do I want to use, right? Here's a trail below. This is the proper example. Assuming I bought this stock on February 1st, if I used a loose trailing stop from Trading Central, I would still be in this position, and my stop loss now should be at 86 cents. But it started off at 57 cents, right? See how that's changed? That's a trailing stop. I can do it by percentage as well, right? And do the same thing. It would have been stopped out pretty fast at 10%. I need to give it a little bit more room. So all that to say here we go. 15% seems to work great for this stock. If you have a 10% stop loss as your limit, like I do, then and I put this trade on, maybe I can't trade this stock because the volatility was too high. That's also important, and it deserves a whole other presentation on risk management and position sizing, which I don't have the time for today. But this is a great tool that I don't think is really shown too much to help you with your risk management. So technical analysis is not just about idea generation. It's also very critical in terms of risk management. And you can use these patterns and risk tools to help you design your whole trading strategy. And this is a good example of a trailing 15% stop loss would have kept you in the trade going up, all the way up. So pretty cool. Did I miss anything there? I know.
Well, actually, Gary, you brought up before. So for this particular stock, there were two classic patterns that came out. I guess are there, from the list of classic patterns that Technical Insight covers, do you have any, are there certain classic patterns that you prefer working with, and that you've had more success with, and there are certain classic patterns where you'd say, be a little more cautious with?
Yeah, absolutely. Great question, right? So again, this is all subjective because this is from my experience, right? And everyone will be a bit different. But if I jump into the screener right here, I'll click on classic patterns. And there's some that always catch my eye that I'm interested in. I'll just keep it to bullish here. The ones that I like the most are always continuation wedges, bullish ones, obviously. In this case, I'll just put it to chart view. I love these. I have a bunch of patterns in here. I got diamonds in here for some reason. There we go. So I want a diamond. Sorry, I wanted bullish continuation wedge, because these always form after a nice sustained uptrend. So this is probably one of my favorite ones. It's a wedge. Here's a good example here of First Phosphate Corp, where you had a prior trend, it's squeezing, and finally the buyers have stepped in to offset the sellers, and it resumed. So that's one of my favorite ones by far. Another one, which is a bit rarer for sure, would be a Head and Shoulders bottom. I think a lot of people might have heard from financial media constantly talked about Head and Shoulders tops and bottoms, right? I like the Head and Shoulders bottom pattern probably the most for those bottom up plays, and you can see why it looks like that. Here's a good example of a REIT, Nexus Industrial. We have the left shoulder, the head, and the right shoulder. It's slanted upward. There's a neckline, and it breaks out to the upside. This is also, when I see this pattern, I absolutely love it. Probably one of my favorites, but they are more rare and harder to detect. They're not always going to be beautiful textbook patterns. You see some of them meet the requirement from textbook theory, but this one catches my eye the most. So you don't have to be a trained technical analyst and a trained eye for it. It's all here for you to look at, and that's how I use the tool, to look at the most picture perfect ones. And then I would say there, Bobby, I always love the upside breakout. That's just my style. I don't like trying to catch falling knives or trying to buy the dip. I like to buy strength and momentum, and there's a whole reason for that, which I can't get into today. But you can see a lot of these happening right now, specifically in this type of market regime we're in, which has been a pretty fairly good trending Canadian market. So those are the main ones I look at. Falling wedges also could be called these consolidation triangles, and inverted head and shoulders, right? Bottom head and shoulders pattern, and breakouts. But there's probably more in there. I've used like double bottoms as well. But I encourage everyone to experiment and see which ones they like.
Perfect. Thank you.
Yeah, there's some questions coming in. I want to leave some time for. Did I miss anything, Bobby? I mean, there's probably lots I can talk about. I think I got most of it though, and how I use the tool.
You know what? If I think back to yesterday's webinar with Nicholas, there were quite a few questions about the moving averages. Do you think we can squeeze that in there for 5 minutes and then head into the questions?
Yeah, let's jump into one. So the one that caught my eye was that Newmont mine in Newmont Corp. This is NYSE. Why not? It's probably similar to the Canadian market because of this triangle pattern I can see here, symmetrical triangle, right? Very popular in this market. I can look into moving averages, and there's a bunch of them here. We have a triple moving average crossover. We have a 21-day simple crossover. Let's just click on that right now. All right, so let me just clear it out. So I'll just deactivate some of them just to have that one alone. So when I click on a moving average, it's going to draw it on the chart, and you can see when it dips below or crosses above, you'll be notified, right? But even better, I can quickly go into the screener and do that, right? If I go into indicators, you're going to have 3 options here. And then these are more of the trend following type of indicators I like to use. We have a double moving average crossover, a single one, right? And a triple one. And I get this question a lot of, which one's better? I mean, that's really up to you. The triple is going to give you a lot of signals, and they could be false signals, right? So I like to go through this one, make sure I'm clicking on bullish, look at the image, and you will see we use a 4-day, 9-day, 18-day on all time frames. And generally, we're trying to find the overall confirmation of a confirmed new uptrend. That's what this one does. We're trying to find these rollovers, right? But it could be choppy when you're in a consolidation market. So keep that in mind. Moving averages work great when you're trending up or down. When they're choppy, they are not very useful whatsoever. You want to find a stock that has that kind of uptrend or at least a crossover. So the double moving average is my favorite, right? Because it's a little more simpler to identify, right? We have an interesting split corp crossover. If I click on it, right? It's been choppy, but now we see the slower moving average catching up now and crossing the upside. This short-term one, right? So now we see a 50-200 day. The 50-200 is probably the most talked about. We call that a golden cross when it's bullish, right? Because it's a long-term moving average, 200 days crossing over the 50. This generally means there's a new uptrend taking place here from this massive downtrend, which we can see here. And again, you will have some whipsaws occasionally. So that's why you need more indicators to confirm it. But that's a new technical event every time it crosses over.
Perfect. And you know what? How about we quickly look at the AI assistant tool? You know what?
Yes.
I really do enjoy using it. I'm lazy, so I like the fact that it's going to tell me the most important. Because sometimes you look at these charts, especially for those of you that technical analysis is really new. It's a little bit of they say analysis paralysis.
Mm-hmm.
Well, Phoebe can really help you. I guess get to the the crux of the matter. So could you maybe just talk about that for a little bit?
Oh yeah, thanks for reminding me, Bobby. It's one of our newest features, right? So of course I use this every day, so maybe I don't plug into it as much. But it's important to understand if you're brand new to technical analysis, this is pretty critical because I'm in a summary of Apple right now. There's a lot of activity going on here, right? There's some patterns I can see right here. There's some bullish events, some red bearish events. What does it all mean? And does it tell a story at all? For the first time ever now with this Phoebe AI assistant, we can now tell a story of what all of the indicators mean for Apple, right? So we give you a quick summary. It's been pretty bullish, right? There's a text here that explains to you that we're above key moving averages. There's bullish momentum. There is a classic bullish pattern that we just talked about. I can tell it right away because there's a triangle right here in green. But now you could further that experience and learn, okay, what's the price journey been like? What's the price performance been like on all three major time frames, right? It's been pretty okay. I mean, granted, it's been stalled a bit, but now it seems to be waking up again. This overall trend's been quite long, but we have a conclusion here. But here's the trend. I can keep going down and learn what is the trend on the short term and long term. Pretty bullish on the short term, neutral, midterm. We're talking about those moving averages that Bobby mentioned, looking at how do we use those. It's all interpreted here. So all this to say is that you don't need a technical analyst like myself to explain all these individual patterns to get an overall summary of what Apple looks like from a technical point of view. But I can keep going down, say, is momentum increasing or decreasing? We see it increasing, all based on the indicators that we discuss and we detect for you. And again, the pattern. So there is a head and shoulders bottom in here. You don't even have to click on the chart to understand that there is I just actually talked about one of my favorite patterns actually was the head and shoulders bottom, and it's bullish. Coincidentally, it's in Apple right now, but there's a conclusion here. You can keep learning more. We have this new LLM and new AI tool inside our Training Central Labs that analyzes every single technical event. This is extremely powerful, and as you can imagine, extremely expensive. So please use the tool. We want to test it out, see how it works, but it's really there to design to help you navigate the overall picture. And if you want to learn a bit more, like what does the head and shoulders bottom pattern indicate for Apple, you can do that without having to go through the education center quite yet. We tell you in plain English, what does it mean? And you could go on the rabbit hole here forever and ever. So I encourage everyone to try it out and click on it and see, get the conclusion as fast as possible. I can click on this pattern now, right? And I can jump right into it, right? And see, look at what it looks like. It's quite textbook, and it's still playing out right now. We did hit the target already. That was a very successful pattern, but it's still in play because we haven't invalidated that right shoulder, right? So again, I know what that looks like and how to trade it, but not everybody does. We understand that, of course. This is my day job. So that's what really the assistant helps us with, is telling us the story of all the data points. Does that make sense? Yeah. Any questions on that? Right. Yeah. It works for any stock in here. I know I was looking at Newmont on the newsletter today. There we go. And if I click on that, it'll instantly update right away. There's that symmetrical triangle. I can tell it right away. It's there based on the price action, but you can learn that pattern right here. There it is. And there's also a short-term pattern, a bar pattern. So we'll combine and we'll weight the evidence of technical analysis in here to come to a conclusion, right? So it's kind of like your summary, and it's like your personal assistant to say, hey, don't go through every single pattern here or every single event. We'll give you a conclusion as to what it means for the stock from a technical perspective. It doesn't mean it may not be attractive from a fundamental point of view, but at least having the price action understood is pretty critical in my opinion.
Perfect.
Cool.
Okay, you know what? We looked at. Sorry, I'm like zooming in. my eyes are failing me. I know we're looking at daily charts. There's also the weekly charts. Can we perhaps like explain the difference for our viewers?
Of course, yeah. So this is the longest term we have on the weekly chart. So the long-term chart, you may not always have any kind of events here. So it's going to change the time frame, right, to weekly bars. You can also change it to weekly bars right here, right? So keep in mind, if I'm going to go into, as a quick tip, if I'm going to be in intermediate term and go long term, make sure you change the indicator to weekly, because it's on weekly bars, we'll detect it. Daily bars will stick to the intermediate term. So you don't have to make that distinction, right? But here, again, this is the longer term view, which I look at always first. What's the trend, right? Is it bullish? Is the key moving average trending up? We crossed above it here. What an opportunity that would have been when we got notified of the long-term event, right? So again, long-term is more than 9 months. That's our longest time frame to look at in terms of the same patterns can be detected, although they're going to be more rare because we're looking at a longer history of weekly bars. So again, think of it as each candlestick here is a bar. I can change it to bars, a bar chart. Each bar represents 1 week of price history, right? And that's where we're detecting patterns on here. If I go into daily, each bar is going to be daily. I will deactivate the long term. We'll jump into midterm, right? And short term, by the way. these are short term, and these are the same time frame, daily charts. Long term, you can screen for that. Jump right into screening, right? Classic patterns, bullish, right? And I can change my time frame to just weekly alone. I have some clients that will only use weekly bars. They believe that I should only take action when a weekly event has been confirmed. Nothing wrong with that, right? They're longer term holding clients that like to hold stocks for up to upwards of 5 years. So they would only be interested in patterns taking shape on a longer term time frame. And you can do that here as well with classic patterns. There's a big one and some venture stocks. So I mean, there's a bunch surprise on weekly taking place. I can change it to market cap to large caps. Do I get anything? There are some. Capstone Copper on the radar, some big moves. So again, the longer term trend, 9 months out, right? I can click on this and change it, right? But make sure the bars are in weekly. That's how you access the longer term time frame.
Excellent. I see that there's like 2 questions about, they're kind of similar in the sense that, the accuracy, but I think it's not a fair question, because even like a fundamental analyst research report, it doesn't guarantee that it'll reach the price target. I think the idea here is to find securities that seem to have a certain potential, and then as Gary has mentioned, and then you put in a stop loss. You put in you put it at you put it on your alert. You have to check.
Absolutely, yeah. So we kind of shy away from that performance because it is pattern detection based on textbook theory, right? So if there was 2 or 3 patterns that always made money, then I wouldn't be on this call right now. I'd be on the beach somewhere, right? So of course it takes risk management is the next step in this process. So there are documented success rates from the CMT. For those that follow the Chartered Market Technician program, something that I'm involved with, there are from history. We know which patterns have a better chance of success, but they're again, it's subjective as well because it depends on your buying power, how long you held for. We know a little bit. It's out there. You can find it, right? But because it's so broad and generic, we don't like to use it because it's not a trade idea service. Keep that in mind. We're not trying to give you buy-sell signals here. You have to do your own research and develop your own strategy. That's critical in this component, right? So it's not a signal tool in that regard, right? It is a research tool to help you define. Maybe you would tie into fundamentals. By the way, we have fundamentals built into this tool in the AI assistant because National Bank subscribes to our fundamental insight tool, which is for another webinar. But you can combine both while not having to leave the product as well. We talked about that quantum mental rating, right? So there's what's the success rate in that? We have a whole history as well on rankings for another day. But again, don't focus on why should I follow this pattern if I don't have a dedicated success rate. It's different for every stock as well. Some stocks react to patterns more than others because of the way they're traded. Maybe they're more widely held with specific institutions, right? They have a wider base of money managers following it. So some patterns may seem more successful than others, depending on the asset class. So again, to me, performance does not matter. It's more of your risk management. Once you identify the pattern, once you're in it, once you have a holding, then it's a whole different story once you're long the position. Yeah.
Excellent, perfect. So we had one last question that came in. I think we can end with that one.
Sure.
So Andrew's asking about how to filter for volume to eliminate low volume stocks and ETFs. So we'd have to go back to the screening page. Gary talked about market cap, but and a little bit after that, there's one for volume.
Yeah, there is. Price. So yes, I didn't go through every single one to save time today. Of course, I love to spend more time. I mean, I could talk about this for hours, right? So my apologies if I missed anything. But volume is a great question because volume is so important in technical analysis, right? So obviously, I'm thinking whoever asked that question is obviously aware. Volume does confirm price patterns, right? So when we have breakouts, by the way, that's built into the product. So when we confirm a technical pattern breakout, like a head and shoulders bottom, it has to be on above average volume. This is what we call adhering to Dow theory. Again, I won't go through that today, but that deserves its own webinar. But you can search by that. And again, volume and event date. You can put in, say, 100,000, whatever you like. It's going to help you with liquidity. 500,000 would greatly change the results. And as I do that, you're going to see larger cap stocks anyway, right? And there's the volume we indicate. So we will always include the volume at the event date because it's so important. And I didn't really touch on that today, but volume has to confirm price action. That's a major concept of technical analysis. So you can search for what you care about in terms of the minimum volume, and also based on it kind of goes hand in hand with market cap. But that's how you can find it. And you can also do a max volume. I don't know why you do that, to be honest. I always like to keep it to minimum, right? And the price, I think maybe focus on $10 or more, just to make sure I'm looking for good quality names to keep me safe, to not get stuck with an illiquid stock that I can't get out of if something happens that's negative, right? But there you go. There's the volume filter, and to each their own, depending on the stocks you trade, right? Some stocks will have a different volume profile, right? But that's where it is. Of course, it's important. It's one of the foundations of technical analysis.
Excellent, perfect. So you know what, Gary? Let's. I think at this we can call it a lunch.
Okay.
So again, thank you very much for spending time with us today and to showing our clients the technical insight. Really, the ins and outs of the tool. I might be repeating myself, but for those who logged in a little bit later, we do have on the NBDB YouTube channel. There are 2 videos that were updated recently that explain technical insights. And again, once you're on YouTube channel, scroll down. We are under Enrich Your Experience as a Do-It-Yourself Investor, and you're looking at Discover Technical Insight Part 1 and Part 2. And just repeating myself, Part 1 deals more with the screener. Part 2 looks at the AI assistant and the actual chart area. Listen, between them, we're talking about 15 minutes of your time. I think it's time well spent. I guess that's it. Again, thank you for spending time with us. Thank you everyone for your lunch hours, and I wish everyone success in your trading. Have a good day, everyone.